Hello, everyone, and thank you for joining today's workshop. I appreciate everyone's attendance today. Grateful to have you guys on with us. Jason is with us with Jason Graham with Columbus Life. We're very happy to have him. Columbus Life has got some really interesting and great things going on lately, so we thought it'd be important or prudent for us to bring that information out to you guys. And then also maybe at the end, just 30 seconds of what's new here at Best Agency going forward. With that said, if you have any questions, it's a really short group here. If you have any questions, we do have some people getting ready to come on. So Jason, I'll take care of that. You don't have to worry about that. But if you have any questions, you can jot them in the chat box and we will do our best to answer those questions for you guys. With that said, I know everyone's time is extremely valuable. We're going to get it over to Jason, and you can stop looking at this ugly mug for the rest of the show.
Excellent. Hey, Lewis. Hey, man. I really appreciate you giving me some time today with your agency, with your agents. Good afternoon, everyone. Some of you may or may not know, my name is Jason Graham, the Regional Vice President for Columbus Life here in the state of Florida, and we work very closely with Lewis and his agency in terms of providing quality products and services and so forth to agents and agencies throughout. We're going to touch on a couple of things that in some meetings with Lewis and some industry meetings that Lewis has been a part of, where we're getting a lot of notice in terms of where we may be a fit and with potentially with your clients based on what you're looking for and everything. And then hopefully maybe you come out of here with a couple of ideas that you can actually talk to. Oh, sorry. I think I got somebody's talking. Sorry.
I'll try to find out and get that taken care of. No worries.
Okay. Yep. No problem. I just want to make sure I'm not speaking over anybody. So hopefully at the end of the day, you're going to come up with a couple of ideas that we're running with. You may come up with some opportunities with some of your clients that you may want to talk with Lewis about and see where it could be a fit for us here at Columbus Life. Just a quick intro on Columbus Life. Those that are not have never heard of Columbus Life, we are part of the Western and Southern family. We are a mutual holding company. We originated in Columbus, but we've been in Cincinnati probably for the last 20, 25 years with Western and Southern. Western Southern is also a mutual company, one of the largest financial companies in the country. And we have a commitment to obviously honoring our policyholders, as our policyholders are the shareholders of this company and so forth. So right now, in this day and age, I think it's great to be a mutual company, and hopefully you can understand why that may be based on all that's going on in the industry now, particularly in the private equity side and so forth. So with that said, let's go ahead and hit on a couple of agenda points that we're going to touch on throughout our call today. First, we're going to talk about our rapid issue IUL product. We launched this back in March of this year, and it's gotten some great traction. And as much as there is some great traction and the idea of it, I also wanted to talk a little bit about kind of what our experience has been with it so far. But also, in addition to kind of your normal mom and pop type sales that you're going to do, we're going to talk about a couple of sales ideas that you can use with this particular product. Secondly, as you may, all of you that are maybe seasoned insurance agents, there were some times where a lot of carriers, I know like Lincoln used to be, Penn Mutual, that had actually a table shave program from an underwriting standpoint. Well, Columbus has one as well too, and I think that creates some opportunities. And we'll touch on a little bit about that and what the qualifications are for that. And then finally, we're going to touch on an idea. I know survivorship products are kind of earmarked for estate planning and estate taxes standpoint, but there's a lot of creative strategies out there that you can use with survivorship where even if your client doesn't have an estate tax problem, there are some great legacy opportunities, also retirement income opportunities that you can position as survivorship in. And we'll talk a little bit about our survivorship IUL product and using it as a multi-generational asset strategy. So first things first, let's talk about our rapid issue product. I'm just going to hit on the high points here. And I've actually created a digital sales room, which I will send to Lewis, that has all of our material in terms of the specs, marketing material, and so forth, so that you can get a little bit more comfortable with, with the product. And then also, if you're appointed with us, you can actually run a demo application just so you can get a feel for how that application process is. So Index Explorer now, like I said, we launched this at the at March of this year. We've gotten a lot of good feedback and a lot of good business through this. We have a capacity for more, which is great. In a nutshell, here's are those that are eligible for the product between the ages of 18 to 60. And then between certain age ranges, there's a limit on the max they can apply for. So from 18 to 50, minimum is 25,000, but you can go all the way up to $1 million. For those that are 51 to 60, they can go as low as 25, but it's no more than 250,000 in terms of applying for this product. The way that we price this product is we price this to pass through the underwriting process without getting an exam, lab work, blood, APSs, that sort of thing. So for us to achieve a high pass-through rate, we had to price this product accordingly. So unfortunately, there's no preferred ratings on here, but there are 4 rate classes that your clients can apply for. You've got 2 non-tobacco rate classes and 2 tobacco rate classes. That was intentional because, again, there is an inherent risk that the insurance company is taking by not getting the exam and the lab work and everything else to go through in terms of the application and going through traditional underwriting standpoint. But that cost we consider it more of kind of like a convenience fee for getting in and out the door fairly quickly with this product. So why this page is important, talking about same features and benefits. Some of you may not be familiar with our Index Explorer Plus, which is basically our flagship, fully underwritten IUL product. And so what we did with this rapid issue product is we wanted it to mimic this flagship product. So what we have done is we've moved, pretty much all of the benefits and features that are on the Index Explorer Plus onto the rapid issue product, which I think is important because in the rapid issue world, there's a good amount of carriers out there. Some carriers don't pass along those same benefits and riders to their rapid issue products. It may be a skinny down product, may have some limitations in terms of riders and features. But with us, we really wanted to keep it very transparent to you. If you like what our flagship IUL product is, then you're going to like the rapid issue product because it all has the same features. And then they also have all the same index accounts as well too. So, we have the S&P 500. We got a couple of S&P 500 index accounts, a fixed account that's currently paying 4.2%. And then we just launched a JP Morgan balanced growth index account that's also available on the rapid issue product. So in addition to those, you're going to see that we've got a guaranteed persistency bonus that starts in year 11. We've got a 10-year surrender on the policy. You have the ability to take loans out for retirement income down the road, and you can do that either through standard or index loans. What's also nice about our product is that there is no haircut in terms of compensation to you as the agent. We some carriers may decide to do that. We didn't. So whatever you're set up as from a comp standpoint, that's what you're going to get paid on this product. And then again, I mentioned before, we're going to have a bundle of riders that you're going to be able to have on the product. Some key ones that are important. We've got an early cash value rider that you can use on this product. Our living benefits rider, which covers for specified medical condition, chronic and terminal illness on there. We've got a premium deposit account. So for those cases where the client wants to do a one-time payment, but they don't want to make the contract, they could use our premium deposit account to fund into the policy. And an overloan protection rider that is when for retirement purposes could prevent the policy from lapsing due to overborrowing. So again, we got a lot of these items and features that are on our flagship product on this rapid issue product. And so hopefully, again, more of that can be seen on the digital sales room when I send that out to Lewis after the call. So what's our experience been so far with this? You say, Jason, this sounds really great. On paper, it seems like this thing can move pretty easily, blah, blah, blah. But what have you guys experienced so far in terms of this? So as we sit right now, our goal with this product was to get around a 70% pass-through rate. So for every 10 cases, 7 should pass through with no exam, no lab work, and no APSs. So as we're talking right now, we're pretty close to that. I think we're like around 68 or 69% right now, which is fantastic. Again, we're going to continue to strive to get to that 70% as well too, and we may make some modifications here down the road. Average submit to offer time. So when the time that the application, everything else has been submitted into when an offer is made by the underwriter, it's taking 2.3 days. On the average offer acceptance to issue time, meaning once the offer is accepted to the time that we issue, it's 2.7 days. Our goal on the high end from submit to issue is about 5 days. So we're really right up onto that. And obviously we're looking to continue to improve upon doing that. But this bottom one is important because as you get to feel a little bit more on our rapid issue product, getting it all done correctly from the get-go knocks down a considerable amount of time in terms of getting an offer made and getting it issued. So you can see on these bottom numbers, what this is showing is if the application that was submitted in was 100% IGO, meaning we weren't needing any additional information, if we were missing stuff that wasn't on the app, that sort of thing, that the average time from submit to offer was 1.63 days. Which is pretty phenomenal. And then from offer acceptance to issue, we're at just slightly over 2 days. So you can see by doing the application and getting it 100% in good order from the get-go, it does cut down on the time considerably from getting this policy offered and issued out to you as an agent. So again, we're going to continue to strive to get to improve upon this, with processes and so forth. But so far on version 1.0, we seem to be liking where things are going. Okay, now we've kind of obviously touched a little bit about the rapid issue product and what it's about, and where the opportunities that may lie on there as your traditional sale to an individual for death benefit needs or for LERP sales and so forth. But I wanted to touch on a couple of sales ideas that you may want to consider when using our Index Explorer Now product. First one is executive bonus plans, Section 162 plans. These are ideal cases for Index Explorer Now. If some of you work in the business owner space or executive benefits and so forth, executive bonus plans are great plans to help, business owners retain key employees by setting up on a bonus plan to where they're funding the bonus money into a life insurance policy. Obviously, the policy is owned by the employee and they're the insured and they can name the beneficiary on there. But obviously, the great benefits of the executive bonus is not only just for the employee, but for the business. As long as that bonus is considered reasonable compensation, that is going to be a tax deduction to the corporation. Now, typically the size of these executive bonus plans are, in terms of the premium amounts, could range anywhere between $2,000 to $10,000 to go into these types of plans. So those types of cases are ideal for this. And why it's ideal is because, employees, I'm sure, really love knowing that they're putting a bonus plan in place. But I'm sure the other side of this, oh my gosh, I got to go through underwriting to get this thing going. And, and obviously it takes time out of their day. They have to get an exam, the lab work, APS, all that other stuff. But with Index Explorer Now, you basically just can do an application. The client answers the medical questions. And then from there, based on that, we can turn around and get the policy issued and paid for without client doing an exam, lab work, and all that other stuff. Now, the other thing I forgot to mention when we were talking about the specs of the product, when we were talking about the ratings, to kind of give you an idea on a ballpark from a fully underwritten standpoint, what the ranges that we can accept people or that people will be eligible for this product. Anybody that would come back from a fully underwritten standpoint from super preferred all the way to a table D. So that gives us some great bandwidth for people that may be in really, really, really good health, but they just don't like the whole exam and drawing blood process. For those that may not necessarily be in the, marginally they're okay, but they're, they may be rated a couple tables on a fully underwritten case. This could be a great option for them to go through that. So again, for key employees that want to do this, this is a slam dunk to put these things into place. We do have list bill option available. So for for businesses that want to do this for multiple employees, we have the ability. We can set this up for list bill, where we can send them a bill each month and they can pay for the premiums. And you can customize this. It doesn't have to be the same, for everybody. Somebody could get 2,000 as opposed to 5,000. The agent could put, the business owner might only want to do it for 5 years, or maybe we did 10 years. So you can really design this any way that you want to, and know for sure by using this product that this thing can get in and out the door fairly quickly. The other one that's been coming up quite a bit, and I really like this, is using this rapid issue product as a non-qualified annuity alternative. I know we all are really excited. The interest rates have started to go up over the last year or so. It's created a lot of opportunity for annuity business, not only new money, but also maybe seasoned money that is moving over to, that are getting like low renewal rates and so forth on their existing policies. And obviously annuities tend to be the path of least resistance. I know there are some cases where annuities are being used for income purposes and so forth. But a lot of times, a lot of annuities that are out there are really just more for wealth transfer or legacy planning. So the appeal of that, annuities require no underwriting. And because of the increase in rates, it creates an opportunity where you just want to automatically cement the business into to do an annuity. Which is great, but you ought to remember there's only really one tax benefit that the annuity provides, and that's just the deferring of the growth taxes on the growth of the annuity. But it could potentially create a tax situation for the beneficiaries, particularly non-spousal beneficiaries. So, and then also, some of these annuities do have some living benefits, mainly in the long-term care side, but there could possibly be some taxation with regards to, even though you may not get hit with any sort of surrender charges or fees or anything like that, but that money could potentially be taxable to your client if they're using it for those needs. So what I've come up with, and I'm going to show you a couple of illustrations on this, is using our Index Explore Now product as an annuity alternative. So this first one, if hopefully you guys can see this okay, guys and gals, excuse me. You can see this is a male 50, and I'm not giving the best rate class on our Index Explorer now. I'm giving them non-tobacco, okay? And we're showing here putting in $250,000 as a lump sum which will buy him an initial death benefit of $1 million. So right out of the gate, this is a better option for your client from a wealth transfer standpoint, because that 250 now becomes $1 million income tax free. And as you all remember, I know this is a MEC contract, but that death benefit taxation doesn't get impacted because it's a MEC. It's only when you're pulling monies out of the cash value that there's a potential issue from a tax standpoint. But from an inheritance or a death benefit play standpoint, that $1 million is income tax free. So you basically are getting 4-to-1 on your money from a tax efficiency standpoint. So as you can see with this, we're putting a one-time payment into this contract. And you can see in the highlighted areas from an account value standpoint, showing our current illustration rate. On the account value, the clients broke even around year 3. But for net cash surrender value, you pretty much broke even somewhere around year 5. And then the way this thing is illustrated, it goes all the way out to 120. Now, I understand that 6.21% each and every year is highly unlikely, but that's just the world that we live in terms of how illustrations work. But this gives you a good idea how this 250 could translate into $1 million of death benefit. You get the same tax deferral growth in terms of the cash value, and that $1 million is available for our living benefits rider, which is going to be more tax favorable to your client if they were to experience a specified medical condition, chronic illness or terminal illness on there. So as you can see with this contract, this sounds like a really good deal. A great way to reposition non-qualified dollars, whether it's money in a money market or CD that's being taxed on that interest, or even a non-qualified annuity that maybe is a nice opportunity to offset that into this contract. And the client doesn't have to go through potentially no underwriting. So the timing of this going through as opposed to annuity could be the same or even faster, because there's no suitability or compliance that's being reviewed with regards to an annuity. So this next one is the same design, but like I mentioned to you before, we've got a rider that allows first high early cash value, meaning that we remove the surrender charges off the contract. What's nice about our rider is that some carriers, they do levelized compensation for that. We don't. We pay you full compensation on this product, even if you're using that early cash value rider. Now, there is a drawback, and I am, disclaimer, there is a 5-year chargeback if you use this rider. So if the client decides to surrender their contract in year 4, there's going to be some commissions that are going to be owed back to the company. But after year 5, you're pretty much gone. But look how much of a difference it makes in the early years. So in the first year of that 250, 235,000 is available as cash value. That's 95% of the premium is available in this contract in the first year. And then as you can see from a break-even standpoint, both the account value and the surrender value get you to around year 4, where there is the break-even point for your client in terms of what they put in relation to what it's worth. But again, you still get the same death benefit, the same tax deferral growth in the cash value, the same ability to accelerate the death benefit, for specified medical condition, chronic or terminal illness. Okay, so let's just do a quick summary of this. And again, these are just averages. I'm not like saying this is the be all end all or anything, but just to get an idea from a compensation standpoint, how this is going to work. Typically on your fixed index annuity business that you do, the comp range is about 7 or 8%. When you're talking about a fixed annuity, you're talking about 3 to 4%. So the commission, if you put that 250,000 into an index annuity or a fixed annuity, you're going to get somewhere between 10 to 20,000 in commission off that deal. That illustration that I just showed you had a target premium of $27,650. So for compliance reasons, I can't put those actual numbers on there because it's all dependent on how you're contracted with Lewis. But I know Lewis will agree, he's making more money and you're making more money by considering this option as a non-qualified annuity alternative. Plus, starting in year 2, this product has trail comp. You get trail comp starting in year 2, which, it's not much, but like anything else, you build it up. That trail comp looks to be a little bit more attractive each year that you're getting. Plus, you're getting excess commission over anything over target premium, which in this case, you're putting 250 in, 230,000 of that is considered excess, and you're going to get comp on that as well too. So you can see that you're providing more value to the client, more opportunities to access the death benefit, income tax-free death benefit, even though it's a modified endowment contract. So again, this is something that you guys can consider. Now, on those illustrations, I showed 250. In that illustration, you can put more into that. You don't have to buy $1 million. I was just showing on the high end. You can do, you can design it any way you want to. You can want to do it for 100,000. We can show what the death benefit would be to do that. But again, just thinking outside the box and be able to use this product just like you would write an annuity. This would be the same process as we just went through those numbers in terms of the average offer time, offer acceptance to the policy being issued. It turns around pretty quickly in relation to an annuity. So hopefully this gets you thinking that maybe there's some alternatives than just your traditional annuity sale by looking at a rapid issue product. So I'm going to go on to the table shape program, but I just wanted to check in with Lewis and see if there's any questions anybody may have at this point.
I don't see anything in the chat box currently.
Okay. All right. Well, I appreciate it, Lewis. Thank you for checking in on that. All right, let's talk about our table shave program. This is going to be a fairly easy conversation, but just wanted you to kind of keep this in mind. When you're working with clients, obviously we don't know what their underwriting is going to come back as, but as field underwriters, as you are with as insurance agents, you can get a gauge for what a particular client's going to come back as based on what being in this industry as long as we have. And I think the table shave program really comes into light because there's some opportunities where you can really help your clients from a cost standpoint get an affordable amount of insurance that will protect them, and it's not costing them a great deal of money to get that coverage. So let's touch on a little bit about how our program is. So with our table shave program, it is available for all of our permanent products, which includes our survivorship products. So we've got a current assumption UL, a guaranteed UL, our fully underwritten IUL product. Now, our Index Explorer Now product is not available for table shave, and then our survivorship product. The issue ages have to be between the ages of 20 to 70. The maximum face amount is no more than $1 million with us. And from here, as long as they come back no worse than a table 3 or C, we will shave them to a standard rating, whether it's standard non-tobacco or standard tobacco. And this last bullet point, I've seen a lot of inquiry into this as well too. This is a great program to use if you've come across some term cases where they were rated, where they're like a B or C or a 2 or a 3 or so forth. There may be some opportunities you may want to consider a permanent policy with us if you got a client that is rated, because I know there's not a lot of carriers out there. I don't know of any term carrier out there that does a table shave for their term products. But using our table shave for our UL products could be an opportunity where you can place some permanent coverage inside and get them a standard rating on that. So let's get a look at what much of a difference it is in terms of pricing when it comes to using our table shave program. So on the top, this is showing our guaranteed UL product, which is called Voyager. And carrier A, obviously we don't want to put anybody's company name out there, but it's a highly rated, strong competitor in the GUL space. And what this is showing is a scenario where somebody was a table 3 with this particular carrier, which did not have a table shave program, and somebody that got a table 3 with us, and we do have a table shave program. You can see from our product standpoint that our premium is less, they're paying less, and they're guaranteeing it just as long. So we're saving the client, actually, we're saving your client quite a bit of money. In addition to the $1,000 a year that they're saving, you're paying 20 less years into the contract. So, you do the math, $1,000, for $1,000 up to age 100, and then the additional 6,500 that's not being paid, that would need to be paid, or 5,500 that would be paid, because that 6,500 is being paid for all years, whereas us starts at age 100. So you can see that the savings is pretty phenomenal when you consider our table shave program. Then let's look at it from our IUL. So, in this particular design, we're looking at this as using life insurance as a supplemental retirement plan, or we like to call LIRP. In this scenario, we're using obviously another quality carrier that we compete with pretty regularly that doesn't have a table shave program. And as you can see, from a table C to standard, we've got more death benefit, we've got more income, and we got more death benefit at age 65. So it's a win-win-win for the client. Even though that they might have been rated with this carrier, they could have been standard with us at Columbus Life. You can see that that's a draft. The cash flow improvement was over 20. It was 27%. So again, those cases where you're working with clients that they may not necessarily be in the best of health, but they're not like 1 foot in, 1 out, 1 foot in the coffin and so forth. There could be an opportunity. You may want to look at us and potentially position us in a way that they can get a quality price product for what they need. All right, so that's it about the table shave program. I know we went through that pretty fast, but that it's a pretty cut and dry sort of situation. Is there any questions at this point in terms of our table shave program?
Any questions? None in the chat box, and I don't see anyone unmuting themselves.
Okay. All right. All right, we'll move on and we'll finish up with our talking about a sales strategy using our Survivorship IUL product. As I mentioned before, Survivorship IUL or survivorship in general, for those that have been in the industry for a while, usually was earmarked for estate taxes. Because if you have a married couple, the estate tax doesn't fall upon them until the last spouse passes away. And the survivorship death benefit is usually used for covering for the estate taxes and also being shielded from an estate tax standpoint. But as you all know, our estate tax limits are pretty high right now, and with our annual gifting exclusion and so forth, there's not a lot of people that have an estate tax problem now. I mean, I know we're about to sunset, I think in 2025 or 2026, back down to 5 million unless Congress changes it otherwise. But even with that, you still don't have a lot of people that are going to have an estate tax problem with that. So us, a lot of carriers like us have, felt like that there is an opportunity using survivorship IUL as not just for an estate tax tool, but more of a wealth transfer, LERP type of, strategy and so forth, and really benefiting people while they're around, but also benefiting their loved ones, while they're living and when they pass on as well too. So we really feel like SIUL could be a very good tool for that, and it creates some opportunities from an underwriting standpoint, and we'll talk a little bit about that. We did create a flyer for this, and I'll actually send it out to Lewis that you can review on this. But I'm basically just taking the information from there and just kind of talking through what we did here. So in this particular case study where we used our survivorship IUL product, a lot of times you're seeing these cases where they're, the insureds are the husband and wife, business owners where they're trying to set up like a buy-sell agreement. But we also have come up with a strategy where, where you can have two insureds that are not necessarily married. In this case, we're using a father and son, but there is an insurable interest between the two based on their particular situation. So what is happening is here, that father and son are the insureds on this contract. Dave is 60, standard non-tobacco. Steve, who's a son, he's 30 and he's at preferred non-tobacco. And Dave really wants to maximize legacy for his grandchildren, Steve's children, but also provide living benefits access to the surviving insured, as well as themselves if they need it. So how we designed this particular strategy, and again, we can send this full illustration out to you if you like to see this, is that Dave has decided that he's going to fund the policy for the first 10 years. And that's going to be at a clip of $2,000 a month. And he'll do that for the first 10 years. So you can see here on the summary side of this, he's put, at the end of 10 years, he's put $240,000 into this contract. After those 10 years are out, Steve then comes on and continues funding the policy for an additional 30 years at the same clip. So $2,000 a month for 30 years. And obviously that it equates to $720,000 that they've put in. So all in all, between them, they put $960,000 into this into this survivorship IUL product with us. So Dad, the father, Dave, reaches age 75 and he is ready to, live, needs some supplemental retirement income. Well, because he's owner of the survivorship contract, he can access the cash value. And so this is showing him pulling out $75,000 a year out of the contract for 15 years. We figure his life expectancy is going to be around 90. So you can see that he's taken out $75,000 over 15 years. In all, he's taken out a little over $1.1 million in terms of income to live off of. And again, because it's not a MEC, it is that money is all tax-free to them. And then you'll notice at his age 90, the death benefit currently is at $768,000. So obviously with survivorship, the death benefit, we project that Dave dies at age 90. But remember with survivorship, we don't pay out a death benefit till both insureds pass away. So it's important to understand that, because if there is a need for death benefit to be paid out immediately upon the death of one of the insureds, this is not a strategy you want to use. But if you're using this as more thinking more long term from a legacy standpoint, then this is something that you can consider. So even though dad dies at age 90, Steve is still around. And Steve, starting out at age 70, actually starts taking income out of this contract, and he's also taking out $75,000 a year out of the policy. And we expect him to pass away around age 90. But you can see in those 20 years, he's taken out $1.5 million of tax-free money to him. And then upon his passing, there's a death benefit of over $1.7 million that's going to get passed along to Steve's children. So what we have done is we've leveraged the insurability of Dave and Steve and created a plan to where they're both funding into the policy at different periods of time. Dad having access to it from a cash value standpoint that he can have some retirement income. And then the son can jump in at his retirement to draw income as well too. Now, the only thing we didn't talk about is the living benefits. So on our survivorship product, we do have our living benefits rider, but it's only available on the surviving insured. So dad passes away. For some reason, something happens with Steve where he has some sort of chronic illness. He has the ability then to accelerate the death benefit to cover for those needs, whether he's staying in a long-term care facility or home health care, whatever that may be. He since he's the only insured left, has access to that. And then vice versa. I mean, obviously Steve is probably the one that's going to outlive, but let's say Steve prematurely dies and Dave is still around. Well, Dave then can use the death benefit and accelerate that death benefit that he could use for for chronic illness, terminal illness, or specified medical condition. But again, we are able to leverage dollars and insurability to create a very solid legacy plan. And again, figure it out. The dad puts in $240,000 a year into this. And he gets 1.1 million back. And for the son, he put 720,000 in, and he got he got 1.5 million in terms of income. But the death benefit then just gets passed along. And this is a net death benefit, not just gross, but net death benefit. So it's net of loans that's going to get passed on to his heirs. So again, this is a really powerful strategy that you can use for your clients that are very legacy minded, but also want to be able to have hands at the wheel and be able to control things when they want to, but also create some sort of agreement with their children in terms of what their wishes are and how they want those wishes to play out. So that is what I have had today. So hopefully with these three topics we talked about, our Index Explorer Now product, our Table Shade program, and using SIUL as a multi-generational asset strategy, I hope that's created some ideas in your head and maybe some opportunities where maybe you can talk to some of your clients and then work with Lewis and his team to do some illustrations and see if there's some opportunities where it may fit. So with that, I will, if anybody has any questions, I'll be glad to answer them for you.
Open it up for questions. If you have questions, you can just unmute and shoot away. Whether it's regarding the IUL Now product, the Table Shave, or the SIUL product. I'll give it a quick glance there. While you guys are thinking of questions, thank you, Jason, for the time that you've shown us and going over the stuff going on now, product enhancements, and the updates with Columbus Life. I appreciate you taking the time, as well as everyone here taking the time out of their busy day to spend with us. Real quick, while there are no questions, I just wanted to let everyone know some new information, new going-ons here at Best Agency. As some of you may know, we did hire an in-house underwriter to help with case design, case underwriting, whether it be with Columbus Life or any of the carriers that we work with. We do have an in-house underwriter that works for us. So she's been in the business for 30 plus years. She knows everyone, and it has been a godsend for our advisors who are working with us here. And just recently, we have hired an advanced case designer to help with your SIUL cases, estate planning, split dollar, premium financing, and what have you. So we have a case designer, advanced case designer, who will help work on some of those cases for you. Along with the annuity space that we're now in, long-term care disability, and of course, with the help of Jason over at Columbus Life, we are getting some phenomenal underwriting, with Columbus Life as well as with all the other carriers we're working with. So that's the new information. You can hear my phone going crazy here for a second. Hold on. I appreciate the time that you guys have spent time with us today. If you guys have any questions, please reach out to your marketer here. I'm always here. If you need me via email, lewis@bestagency.com, or give us a call, 561-241-4500. Before we let everyone go, Jason, any last words?
No, like hopefully I know we've got a fourth quarter. Everybody's usually pretty busy at this point, and we're ready to go to handle any business that you have. Still have time to qualify for our Bahamas conference. We actually just we're doing a sales contest for that where you can get more production credit than we normally would do for that conference. So if you want more information, feel free to reach out to Lewis, and he'll be glad to answer any questions you may have on that. But again, hopefully this was insightful for you all. Hopefully we can see some opportunities where we may be a fit, and look forward to working with you all at some point. So again, Lewis, thank you again for doing this. I really appreciate it. And I hope you guys enjoy the rest of your day.
Thank you, guys. Appreciate it. Jason, thank you once again. And everyone, if you have any questions, reach out to us. We look forward to earning the opportunity to work with some of your new ones. Thank you.